This is Chris Franco. Thank you for tuning in to CMQ Investing. Let me take these off so you don't see so much glare. Then I'm like, here's what I'm going to talk about in this video. Warren Buffett at the 2023 Berkshire Hathaway annual shareholder meeting answered a question about the opportunities to get into a company like Tesla, and just generally speaking, any company that's well positioned in the electric vehicle space or the EV space. Let's get to it. Make sure you subscribe, hit the like button if you like this video, and please comment with your thoughts. I always appreciate that. It's a big motivator, and we'll keep it going. All right, new angle. Whoa. We're going to talk about this clip. I'm going to show you two specific portions and do my best to sort of extract upon or take out the big ideas and help make them make more sense, and hopefully showcase some time-tested concepts that you can, if you haven't already learned them, learn them. If you already know them, retain them. And for all of us, apply them.
Looking at the global trends, it increasingly does seem that zero-emission vehicles may have finally reached the cusp of mass adoption. Do you see any opportunities in this space, either in specific vehicle manufacturers or in related technologies?
So really with the question, this has happened at so many of the Berkshire meetings, someone basically will ask Warren Buffett or Charlie Munger, like, what should I invest in if I want to make a lot of money? And they never answer that because that's not what they're there to do.
Well, I would say that Charlie and I for long have felt that the auto industry is just too tough.
Okay, by too tough, that does not mean that Warren Buffett cannot value or doesn't have a chance of valuing a business that's in that space. The point though, and if, for those of you who know Warren Buffett, this will be a repeat, but Warren Buffett is looking for businesses that are going to be predictable. Businesses that, he can expect to have their earnings grow materially over the next 5, 10 or more years. Because ultimately that's how he likes to put his capital to work. He's able to take advantage of a long time horizon, compound interest, and of course, the massive amount of capital he has to work with. It only makes the money get bigger faster when you start with a big pile in the first place. With that being said, that's what he means by it's too tough. He can't make a reasonable prediction about the future earnings of a business that's in this case, the auto industry.
Ford Motor Company, Henry Ford looked like he owned the world with the Model T and then...
Okay, so before we skip ahead, this is actually perfect. Warren Buffett is mentioning how when the Model T came out, Henry Ford was like king of the world. In some ways, and I'm not drawing a direct, perfect comparison here, but it's kind of like Elon Musk now, where, he's arguably the wealthiest person on the planet, the most influential, the most interesting. He's doing the most to seemingly like change the way that we live. And that's exciting. I'm a fan of Elon Musk. I'm a fan of Tesla. But when it comes to trying to predict where Tesla will be in 10 years, that becomes very difficult. And Warren Buffett is using this comparison to Ford because what happened after the Model T and thereafter? Competition. Not just American competition, but then you got international competition. The big three in Detroit, that doesn't exist in the same way that it used to. But at one point, if you told people in Detroit that, there's 3 car companies based in Detroit and they won't be the leaders of anything, people would look at you like you had 3 heads. So with that being said, I'm going to go to this part a little bit later in the clip. It's the last part of this clip that I'll play, and then I'll expand upon this idea of looking for a business that's predictable, where you can actually have a chance of understanding where it's going to be in the future and why that's so important as a long-term investor.
I think I know where Apple's going to be in 5 or 10 years, and I don't know where the car companies are going to be in 5 or 10 years. And I may be wrong, but that's... Charlie and I follow the auto business with intense interest. Charlie's firm was the specialist in General Motors on the Pacific Coast Stock Exchange, and that was a franchise, wasn't it, Charlie?
Yeah, by working very hard, we can make a minor amount of money.
Yeah.
Okay, not a lot there, but there's a lot there. And specifically, let me move this over a little bit so it's a little more balanced out. Understanding where Apple's going to be in the future, that's because Apple, and this is, I'm simplifying this, but the competitive dynamic for a company like Apple is very different than for a company like Tesla. The question you might ask yourself, why wouldn't I invest in Tesla if, in 10 years from now, everyone's driving EVs and Tesla's the #1 maker of EVs? And that's a question it's not a dumb question, right? But really and this is one of those cool, like counterintuitive lessons that I've learned through Warren Buffett, in a space that's so competitive, like the auto industry. And we can look at the auto industry back in the Ford times. I got like back in the Ford times. But there's been a history, kind of a history you can learn from, which is one company comes out, changes the game, and then competition comes in. There's no way to stop it. With the EV space, you have the major car companies, starting to allocate more and more of their resources, into developing and marketing EVs. So the question though is, how can you predict the earnings of that business? Let's say Tesla is 10 years out, when the competitive dynamics are still likely to be, shaken up and then, shaken again. That's what Warren Buffett is getting at. And the types of businesses Warren Buffett wants to own pieces of and own all of are businesses that have durable competitive advantages, not because it sounds cool to say like, oh, we have a moat, but because a moat allows you to have more predictable future earnings, or you could even say, depending on how you want to say it, predictable profits. It's all about predictability. Competition makes predictability impossible if you're honest. And Tesla is guaranteed to have a lot of competition moving forward in the next 5 or 10 years, whereas a company like Apple, which is the biggest holding in Berkshire's publicly traded portfolio, that is a company that is far less at risk of being disrupted by competition, and therefore your projections of the future of that company can be made with a little more certainty than a company where you really have no clue how it's going to turn out, because the competitive war is only just beginning. So I want to leave it there. I think I explained that pretty well on a one take, but let me know in the comments. I'm going to be making a lot more videos, at your request, because I know people want more. I know I've got a lot to say, a lot to share, a lot I've learned that I'm now trying to synthesize and help these ideas spread in more, in bigger ways. So if you enjoyed the video, please give it a like, please subscribe, and I really appreciate you for watching. For CMQ Investing, my name is Chris Franco. We'll talk soon. Later.